What's going on, you guys? Welcome to this video. And with today's video, we're actually going to go ahead and talk about the two types of technical traders that are actually out there. And depending on which type of technical trader you are, that's going to dictate what strategy you should use. And that's also going to dictate the style of trading that you should actually pursue. Whether it's being a scalper, a day trader, or a swing trader, once you figure out what these two are, you'll be able to come out with a much better decision as to which style you should go ahead and pursue. Now, there's actually two main types of technical traders out there, guys, right? Those are the predictive traders and the reactive traders. And in this video, I will explain in more detail the differences between the predictive and the reactive technical trader, and I'll also discuss the advantages and disadvantages of each type and give some examples of when to use them while looking at the charts, so you guys are more aware and more prepared to make the decision on which one you should actually be. So if you're ready to go ahead and learn more about technical traders and which one you can actually fall into, go ahead and smash the like button one time for your boy. Go ahead and comment your favorite nugget down below and make sure to be subscribed to the channel. Now let's go ahead and get right into this. All right, guys, so first let's break down what a technical trader actually is. So a technical trader, guys, are traders that use technical tools, price action, market structure, and various different indicators to actually analyze market data, which allows them to identify trends, ranges, price patterns, and so much more to actually figure out a strategy or a profitable setup that can get them paid. Now, let's talk about the difference between a predictive trader and a reactive trader so that you guys have a deeper understanding of what it is. So a predictive technical trader uses methods like reading historical price levels, liquidity concepts. They also use different things like Fibonacci, Elliott waves, harmonics, and a bunch of other different methods out there to try to predict where price will head in the future. Again, the biggest thing with a predictive trader is that they are trying to use what they're seeing on the charts to predict future price action, okay? Future swings in the market. This type of technical trader is usually an intraday or a swing trader, and they are someone, guys, that usually likes to ride out a move for a long period of time. While reactive traders, they make decisions based on current price signals that have been back tested and are thought to be profitable, but that are happening in real time, right then and there. Reactive traders, guys, use technical levels to enter and manage a trade and rely on trade management to minimize losses and maximize gains. Now, this type of technical trader is usually a scalper or even a potential intraday trader, right? It's somebody that is, again, playing from level to level, and you're reacting based off how price plays off of those specific levels. Now, a predictive technical trader, guys, they might use predictive technical analysis to anticipate changes in the long-term market trends by studying price patterns, volume, long-term trends, and other indicators that can predict where price might head in the future. They usually use pending orders to enter the market and normally have the ability to take advantage of sweet setups with a healthy risk to reward. While reactive traders, they actually use reactive analysis to capitalize on short-term opportunities that can present themselves pretty often in the market, and that's because you're always playing off of each level, right? You're playing ping pong, guys, off of every single key level that the market is showing, and you're just simply reacting off of those key levels based on the candlestick patterns, based on the smaller setups that are actually being shown. Now, reactive traders, guys, they enter and exit trades quickly because, like I said, they're just taking advantage of those small price movements in the market. Now, the thing about them is that they usually use market execution to enter the market, and because they're playing from level to level, the risk to reward usually isn't as sweet as compared to those predictive traders that are out there. So the biggest difference between the two is that a predictive trader takes advantage of what they're seeing on the charts from a historical standpoint or different tools and indicators to predict future price action, which is why they have to take advantage of things like pending order to enter the market, while reactive traders, guys, are paying attention to current level, current price action, current structure price points, and current patterns to identify when it's time to get in real time, which is why they go ahead and take advantage of market execution type of tactics. But I want to go ahead and go into the markets, guys, and really show you exactly how you can use both of these styles of analysis, and that should hopefully give you an idea of which type of technical trader suits you best. All right, let's go ahead and get into this. All right, guys, so let's go ahead and take a quick look at this, right? Now I'm going to go ahead and start off, and I'm going to trade as if I was a predictive trader, right? And what a predictive trader does, guys, is pretty much what I was explaining earlier. They utilize current price levels, previous price levels, historical data, different tools like key levels of support and resistance, trend lines. They also use things like Fibonacci levels. Some of them actually use, depending how, again, what type of strategy they use, they could use harmonic patterns, Elliott wave theory, right? There's so many different styles out there that predictive traders utilize to, again, predict where they think the market is actually going to go. So I'm just going to keep it very simple, guys, and I'm actually going to just use very simple key levels to help me at least paint the picture to you guys of how a predictive trader can actually play. So what a predictive trader will do, guys, is they're going to use previous past history, right? They're going to use key levels in the past. They're going to use key levels of Fibonacci to try to predict where price can eventually go. So if I'm looking at here on GBP JPY, for me, in my opinion, guys, I believe that this market could very easily go back to the upside. Again, I'm making a prediction. But what we also do as predictive traders is we really start to fine-tune what we're looking at to actually go ahead and really figure out where our entry could be. So if my overall bias, guys, and again, both styles of traders can have biases, right? You want to have biases whether you're reactive or predictive, right? But as a predictive trader, guys, this is pretty much how a predictive trader could do it. We've seen that price itself has came down, right? Broken structure, creating this lower low, lower high sequence. We have this level of support right here that was just broken, but then we immediately seen price come back above it with a lot of momentum, right? We're using all of this information to help us identify, guys, what can actually happen next. Now we also see that we have a rising wedge type of pattern, which is a bullish type of pattern. So for me, guys, as a predictive trader, this is a scenario that you could probably take advantage of. Something like this, right? We would wait for price to go ahead and break the pattern, get back down to our level of structure, which in the past, we can see that it is a key level of structure, support and resistance, right? It is a level that has held in the past. Also, we've seen price actually give us a very strong pushback above that level. We respected it once. So yeah, as a predictive trader, we can predict that the market probably will come back down to this level of 158.800 and give us an opportunity to go ahead and go bullish and potentially target all of these levels of liquidity that we have positioned above these highs right here, right? All of this right here, guys, there's probably a ton of liquidity up there. You combine that with all of this imbalance, this inefficient price action. As a predictive trader, that's how we can go ahead and pretty much create a setup that we can go ahead and take advantage of, right? So that's a predictive trader, right? We are predicting where price can go, and we allow price to get to the key level, our area of interest, our kill zone, whatever you want to call it, and then from there, you go ahead and you pull the trigger, you press the button. Now, again, keep in mind, guys, predictive traders, there are more times than not, unless they're actively monitoring this thing, watching price in real time, they're probably going to be setting a pending order, right? Like a setup like this, guys, now that I figured out what I want to see, I would just set a buy limit down here at 158,900, 159, round psychological level, right? Stop loss going to be below the swing low right here, and now you just allow that market to actually do what it has to do. Now, remember what I said, guys, right? Predictive traders usually have the benefit of risk to reward on their side because of how they're actually structuring out their setup. So this right here, guys, is giving us a 3.5 to 1 risk to reward, which means if we're risking 1%, we are targeting for 3.5 to 4%. That is phenomenal type of risk to reward. Now, a reactive trader, this is what they do. Let me go ahead and delete some of this real quick, right? A reactive trader, we're going to be able to keep some of the similar price action patterns that we have on the screen up there, right? And again, we understand the flow. We understand what structure has done. But what we would do, instead of just waiting for price to get down to this level and then see if, take the trade from there, we're going to literally react to how price is playing off of all of our patterns, off of our levels of support and resistance. And this is why it's more so tailored to scalpers in the market, right? Traders that are usually going to be getting in and out of the markets in quick times, because all they're doing is riding price from one level to the next. So for an example, if price does end up breaking, guys, right, but outside of this actual pattern that we have here, a reactive trader can identify that, start to pay attention, wait for price to come back up to retest the backside of the actual pattern, and that can be an entry, right? And now they're reacting to the break of the pattern, the break of structure, and they're entering the market just like that. Now, even if they don't play the break of the actual pattern itself, they can also wait for a break of key levels, right? A break of structure like this, wait for price to come back up to this key level, and now they're going to react based on the candlesticks that they see, right? Whatever your entry is, your candlestick entry pattern is, whichever favorite one you got, whether it's an engulfing, whether it's a doji, whether it's a dark cloud cover, right? That's up to you to decide, but they're reacting off of, for one, the break of structure showing the momentum, but they're also going to be reacting based on the actual candlestick pattern itself. Now, this is how a setup could look like, guys, right? If we see the break of structure, we come back below key level. Now we want to go ahead and identify our entry point. Our entry point is going to be right back here in the middle, retesting back up to structure, right? And now look at our stop loss is going to be at the above of the range here. Target going to be back down to the low of the range that we have right here. And this itself can be a setup, guys, for more of a reactive type of trader. Somebody that is playing the market in real time, actively watching it, seeing what the market is doing, paying attention to those candlesticks, paying attention to the breaks of structure, paying attention to all those components, guys, to say, you know what, I'm going to go ahead and jump in right there. That's why more times than not, they are market execution type of traders, okay? Now, it is very possible to be both, right? You can be both type of traders as well, guys. You could be both a predictive and a reactive trader, and that's honestly what I am, right? I love to figure out, you know, the actual prediction of what the market can do, but I'm also usually paying attention to the markets, right? I'm actively watching the charts, so I'm able to not only predict what I think the market can do, but I will also wait for price to get to that key level that I'm very, very interested in, and then I just go ahead and wait for my candlestick pattern to show itself, and I take advantage of it like that. So if we see this break down below, I'm not reacting to none of that. What I will be reacting to is how we actually play once we come back down to this level, right? If we get the reaction that I want to see, which is usually market coming back to a key level of structure, right, giving us a nice type of break of structure followed by a market structure shift, which is us going from lower low to a higher high sequence, that is me reacting to structure, and then I also go ahead and jump in like that, guys. So I have the benefit of doing both, but a lot of traders usually can do both, but more times than not, they're stuck doing only one because of how they were taught to trade. So is there one better than the other? I don't think so. In fact, I recommend to try to do both. Just understand when you have to use a pending order, more times than not, you are relying on your predictive analysis. But when you're actually using market execution, you are actually relying more or so on your reactive analysis, right? So that's like the easiest way to identify which one you are. Are you using pending orders, or are you using market execution based off patterns that you're actually identifying? Right, so family, those are the two types of traders that are out there. Figure out which one best works for you, which style best works for you, and just figure out a strategy that you're able to tailor around that type of technical analysis, and I promise you, you will start to see massive results, guys. So if you guys got some value from this video, go ahead and smash the like button, drop your favorite comment down below, go ahead and subscribe to the channel because we are going up the entire year, and I look forward to continuously providing you guys with massive value. For our family, I appreciate you guys, and I'll see you guys in the next one. Let's get it.